Hello everybody and welcome back. In this video I want to talk about something related to the overall market, to the S&P 500, the biggest risk I see in this market and how you can benefit from this situation. Because as you probably know, the markets are high, the markets are expensive, there is a lot of hype, the US administration is doing everything they can to just propel stocks to all-time highs. You have a new Fed policy that will be very bullish for stocks, etc., etc. You have a lot of euphoria in this market. People are optimistic. People are liking stocks to go up. People think stocks can only go up and they can't survive a drawdown. You've seen what happened in April. People had a panic attack in April, March, when stocks corrected 15-20%, and people think stocks only go up. Okay, so they are buying expensive stocks at a crazy valuation right now, and the market is definitely expensive. And you have a new risk that is emerging right now, and with this YouTube channel, I want to help as many people as possible. So I will mention this risk and how you can invest in this difficult environment. Because this is a difficult environment, the markets are high. If you buy the index right now, you don't know what your returns will be. So we are a channel of stock pickers, so we can have the choice to only invest in good companies that will do better than the S&P 500. So I think we can start. In case this is your first video from this channel, welcome. My name is Christophe Noor. I'm French. I've been investing in the stock market for almost a decade now and have achieved a performance of 25% per year. And it's always helpful to have a view of the big picture, what is happening in the world, so you can spot some opportunities. And I want to share this from Eugene. Interesting chart from Schroders showing that there are more Nasdaq tech companies with no revenues and are loss-making than ever. It's a wonderful tweet. And these two slides are terrifying. This is a big risk I see for many people on Twitter, on YouTube, or any retail investors, any new investor that is watching my channel. We are living in a world where money is easy, which means the public markets are wild. And you have two slides, so let me explain what is happening here. Buyer beware. There are far more tech companies with no profits or revenues today than in the past. In the left part, you see the percentage of Nasdaq companies with no revenues. In green, you have no revenues, unprofitable. And in blue, you have also no revenues, unprofitable, at prior year end. Basically, you want these two charts are going up and to the right. And we are now at an extremely high level. 2021 was crazy, and now we are still on our way up. Second chart on the right, the percentage of Nasdaq companies that are loss-making. Same thing, we are almost at all-time highs. This is not good. It shows that, as I told you, capital markets are easy. Companies with no profits whatsoever are doing an IPO to raise capital and juice their returns and dilute shareholders. By the way, if you want to become a better investor and improve your performance, I have a coaching program. It gives you the exact method I've used to generate 25% per year for almost a decade. More on that at the end of the video. New investors, retail investors, may be tempted to invest in these sexy companies. I'm not mentioning any specific names here, but you have a couple of IPOs that arrived recently with companies without any revenues, without any net income, without any free cash flows. And these stocks are now public. People can trade this. And I know the story is very appealing. Maybe you are watching this video and you are already invested in a recent IPO, something that is pretty interesting. The story is great because you know the founder, etc., etc. But the company is not generating any profits. I'm telling you, now the economy is in a good shape. Now the US economy is fine. Not great, but fine. When we will have a recession, We will have a recession eventually. Nobody knows when, but we will have one. These companies will suffer immensely. These companies will bleed cash. We've seen exactly the same phenomenon in 2022. In 2021, everybody was euphoric, optimistic, plenty of IPOs, and it ended up badly because, you can see this small decline here. The S&P 500 was down 20% in 2021. But those companies that were unprofitable crashed 70%. So I don't think people understand the risk they take when they invest in new, young, promising companies with a sexy story. I don't think they really understand this risk. They underestimate that the worst case scenario is not a drawdown of 20%. They will lose almost everything. Crashing 70% is almost crashing to 100%. It's almost everything. So you want to avoid this. And by the way, this is the reason why I don't recommend investing in a Nasdaq ETF. And I would always favor doing a dollar cost averaging into the S&P 500 because you don't have this split. Okay, this is kind of crazy. 50% of the Nasdaq companies are loss making. 50%. This is huge. Half of the companies have no profits whatsoever. And now 15% of the companies in the Nasdaq, they have no revenues. No revenues. Like no business model. You have, I can mention one name. I can mention Oklo. I can mention Oklo and show you that this is a company in the energy department about powering data centers thanks to nuclear energy. And the stock is on a run recently. On a year-to-date performance, plus 300%. But so far, they don't have much of a business model. Oklo is developing advanced fission power plants to provide clean, reliable, and affordable energy at scale. It is pursuing two complementary tracks to address this demand, providing reliable commercial scale energy to customers and selling used nuclear fuel recycling services to the US market. But if you look at the fundamentals, no revenue. Zero revenue. Only losses so far. But the story is appealing. The story is sexy right now. So yeah, people are liking the story so far. People are seeing news that in the future data centers will be fueled by nuclear power, which is the case. You see more and more advancements towards more energy for more data centers and nuclear. But these are only news, right? We don't know if they will be good. Maybe they are situated in a good market and nuclear will be the future to provide energy for data centers. But we don't know if they will execute good. What if they are bad? What if they don't have synergies? What if another competitor steals everything? What if the patent they have collapses for some reason? What if there is a conflict of interest? What if? You have plenty of uncertainties for a story. And I see a lot of people this year liking these situations. Something promising in the future. The stock is up 300%. So why not more? Nuclear energy is coming for data centers. So yeah, if you don't have any profits, you can't really value stocks. If you don't have any revenues, you can't really value stocks. How do you value Oklo? How do you know what is the good intrinsic value for Oklo? What is the good price to buy Oklo? For fundamental investors, I would say it's almost impossible to say this. It's impossible to have a good value investing formula, intrinsic value for this business. I am taking Oklo as an example, but you have plenty of examples in the Nasdaq. In fact, 15% of the companies in the Nasdaq are not having any revenues and 50% are not profitable. So, now that you know this, now that you know this risk, how can you benefit? How can you sidestep this risk so you avoid a major crash in your portfolio for, next year if you have a recession, a stock market correction for some reason? Well, it's easy to reverse engineer, right? Charlie Munger has always said, you want to invert, always invert, from Jacoby. So this is a quote from Jacoby. So what if you only want to be invested in profitable companies, you will survive. A good way to revert this phenomenon and this risk is to only invest in companies with revenue, only invest in companies with profitability, with profits, only invest in companies that have always been profitable. Boom. Like this, boom. You remove more than half of the companies if you do this. What if you only invest in companies that have always grown their revenues and their net income? Boom, boom, boom. You filter out companies with cyclicality. You filter out companies that are stable or declining. You just remove this. You only focus on companies that are growing and profitable. Third thing, you also want to be invested in companies with growing industries. In growing industries. Now, I don't know, AI is a growing industry. Digital marketing is a growing industry. Cybersecurity is a growing industry. You want to avoid industries that are dying. You want to avoid bad, cyclical industries when you don't really know the future. For cybersecurity, we all know the future of cybersecurity. The world is going more digital. It's 100% certain that the cybersecurity industry will continue to go up, will grow in the future, right? Let's not say 100%, but yeah, it's almost 100%. The cybersecurity industry is expected to grow 10 to 12% per year in the next 5 to 10 years. So yeah, it's better to only be invested in stocks, in companies, in a growing industry. And based on this criteria, you can reverse engineer this risk. And if you accumulate all these points in your investment process for your portfolio, you can avoid this massive risk. As I told you, the S&P 500, the Nasdaq, all these indexes are expensive right now. So you most importantly want to play defensive, avoid traps. And a good way to avoid traps is to focus on growing, profitable companies in growing industries. If you like this content and you want to go deeper, I have a coaching program. In this program, you will learn the strategy I use to outperform the market. You will learn how to find winning opportunities. You will learn how to properly value stocks, when to buy, when to sell, so that you can build a strong portfolio with great companies. Additionally, inside the program, you will have access to an exclusive community of like-minded investors, and you will also have access to my personalized guidance to reach your investing goals. Click the first link in the description to get more information. You will get a short video that explains how everything works, completely for free. No need for your email address, just click the first link in the description and I'll see you on the other side.